Beautiful. The most important part. Hey, welcome everybody to our Grow Global Monday Mastermind. If it's your first time joining with us, you might be wondering what's Grow Global? Well, we are a large, diverse group of brokerages and real estate agents all across the country, and sometimes even internationally. We get people on here. But we're talking about growing your business, growing your network, growing your life, and we've got a special guest for you today. Before we get into it, though, I just want to let you know some of the resources that we have that are available. We have for you. We have a YouTube channel, and on the YouTube, we actually post the recordings here. So if you hear something you love and you want to come back, you can go in there. And if you ever want to do any research, you can actually get inside if you follow our channel, Grow Global Mastermind Academy. We have 177 videos now from doing these on Mondays at noon Eastern Standard Time. And you see this, if you can see my screen, you got this little magnifying glass here. That's the search. You can go in that, you can type in something like open house, if I can spell right, and you can type that in
Yeah.
there, and it'll show you all the different times we talked about open houses, right? So very cool stuff on there. We also have an Instagram page. On the Instagram page, we do a lot of announcements. You want to follow us there. We have almost 300 followers on there. And also, we put a lot of attaboys out there too, and attagirls. Even if you have something great that you've done and you'd like to have some third-party documentation from somebody else talking great about you, right? Because if you talk great about yourself, you're kind of a jerk. But if other people talk good about you, that's a good thing. And so third-party documentation is always good. We'll create a little graphic for you, let somebody know whoever invited you on here, and then you can post it and share it onto your social media. Of course, we have a Facebook page, Grow Global Mastermind Academy. You want to follow us there. We put our announcements and things in there so you can follow along. And then we have a web page. Now, the web page across the top has all kinds of different resources. I won't get into them, but you can definitely go in and check them out. And then all these links will be provided for you inside the chat group here in a second. You'll be able to go to the chat and you can click on them. But on the events tab, it talks about what we have coming up each Monday. And so today we've got something special for you. Today we're going to be talking about insurance. And, a lot of agents, you're thinking, why are we talking about insurance? Well, I've always said for real estate agents, we have about 17 different moving parts inside of a transaction. And a lot of it goes on behind the scenes, but any one of those moving parts can kill your deal. And the thing about the best realtors out there is we don't just solve problems. The best realtors actually prevent problems. Like they're looking forward ahead. You're not waiting for the problem to happen. So today's conversation is about one of the biggest hidden deal killers in real estate, and that's the insurance. So many of us have had transactions where the financing's approved, inspections were complete, everyone's excited to go. And then insurance comes in, the dreaded insurance comes in at the end and nearly killed the deal at the 11th hour. So today we're going to be talking to Trey, and Trey's going to be talking about how insurance issues can delay or even derail a closing, and best of all, how to avoid those, how to prevent them, how to see it ahead of time. The insurance red flags every agent should spot before they become a deal breaker. Like you should be able to see some of these things ahead of time as an agent. And then simple strategies to help clients overcome insurance challenges and keep deals on track. So we'll be talking to Trey Bowen. Trey, it's Bowen, right? Not Bowen. If you're from north where I'm at, we'd probably say Bowen, but Trey Bowen, right?
That's right. Bowen it is.
So Trey's the owner of Legacy Insurance, and he is a protection specialist and financial services professional. And so Trey's going to take over now. For those of you who have questions, you can put the questions in the chat, or if you want to ask it live, you can raise your hand. We're going to unmute you, and you'll turn your camera on, and you can ask the question live. The cool thing about asking the question live is our super awesome tech team will actually chop these up into shorts. So if you click your camera on, you have a great question, Trey will answer it for you, and you can have a little back and forth, and now you got yourself a little social media clip to put out on your own social media that you can share. And so with that, Trey, take it away.
Well, thank you so much for having me, guys. I appreciate the opportunity to talk with you guys about insurance. It's not the funnest topic in the world, but as somebody that's been doing it for 15 years, I have a great privilege to know and learn a lot from this insurance world. And as a broker, I have the opportunity to shop with over 100 different insurance carriers to find companies the best rate. So we're definitely here to help. And jumping right into it, you did ask what's going to cause deals not to go through. And that's a great question for insurance. a lot of the times that we most deal with is your debt to income ratio. We get a lot of carriers and reach out to us about, hey, look, we're looking to get this quote down to X amount to be able to close on the house. And as an insurance brokerage, we can shop that and find the best deals for them, whether it be a VA loan, traditional loan, or whatever loan they may be doing. That does factor into the insurance carriers based on the deductible they can have. So
Hey,
a
Trey,
lot of
real
carriers
quick.
are definitely,
Sorry
yeah,
about that. Cut you off right mid-sentence. Real quick, explain to everybody out there, because you said something great right there. I want to dive deep
yeah.
into it. The difference between being a broker versus just, hey, they're just I'll say State Farm, but it could be anything, a State Farm or Nationwide. I'm not just picking on State Farm. What's the difference between that and why they would want to have a broker?
Yeah, I mean, a lot of customers feel like they have some loyalty to a carrier, and that carrier doesn't necessarily mean that they're going to show loyalty back with that as well. So, with us as a broker, we can shop it with a bunch of companies. I mean, again, myself, I have over 100 different carriers to be able to look at it, price it out with, and tell you what underwriting guidelines may look like compared to an individual who can just tell you the pricing for one carrier. And, a lot of times everybody has different guidelines of what's eligible and not eligible. And then assuming that the price is always the best price based on quoting one carrier is not accurate. It's actually very rare that, if you're just looking through just one standalone captive carrier, captive meaning they only have opportunity to sell with one carrier. And that's going to be probably the most expensive route to go. So, as a broker, it does tell you that every carrier is different and everybody has different appetites. So we're not going to feed you just one appetite. We can look at the property itself, basically, and tell you what's going to be a better fit for you, whether it be eligibility guidelines, or, in many cases, it's a lot of time, it's the roof age. So, we get a lot of questions about what that looks like and who's going to take that home for eligibility. And a lot of times a captive carrier cannot do so, or you're having to bundle it to even get a competitive rate whatsoever. So a lot of the carriers that I work with, you can do standalone home insurance. It's no problem. And you can even bundle it and get a better rate. A lot of times when I work with mortgage lenders or realtors, I'm quoting the home directly and then working on the autos after closing or all at the same time as well. So my ability to quote those out, it's really based on just having a little information from the realtor or mortgage lender themselves to be able to quote those. So it's really easy process for me. And then when I put their information in the system, I get a list of all the carriers, and I'll normally look at the top three carriers based on coverages and product availability. So it's easy for me to do that. We are licensed in 17 states. So we're pretty global when it comes to our reach, and all the states are connected. So we have pretty much all Eastern United States, so we can definitely do that as well. But
Trey, does
we
your
don't.
website, we have agents from all across the country that are on here and that'll
Yeah,
be watching it later on YouTube. Does your website tell you which states are covered so that they can get a hold of you?
they do. We have a map, and then we also have a description of those states as well. We even have a Facebook page as well that we recently posted on there that we added Illinois to that group as well. So Illinois, if you're local. So if you want to know a little bit more about our site, you can go to insureatlegacy.com to get a little description of our team, where we're at. We have two office locations. They kind of give a description of what we can do for you as well. We do auto, home, life, health, even business. So we can kind of do it all. From an insurance background, we normally start with the auto and home, and then we talk to our clients about life and health or any business related activities they may be pursuing as well.
And Trey, you said that is insureatlegacy.com. Is that correct?
You got it.
Great.
Insureatlegacy.com.
We'll put it in the
So
chat,
Trey,
and then for those of you watching on YouTube, it'll also be down in the description section. Go ahead.
I've got a question for you about roofs. We've had a lot of activity going on with roofs and how that plays out. We have people knocking on doors and saying, "Hey, you have hail damage," and I can get your roof replaced, and it won't cost you anything. We'll just bill your insurance company, or we'll make sure you're covered through your insurance company. Can you talk a little bit about how that impacts someone's ability to get insurance, either themselves down the road or for the home itself? What's going on in the industry with roofs now?
Yeah, I mean, you see recently like Oklahoma got hit by the hailstorms and weather-related damages. We got a lot of phone calls from that as well. And it is, a lot of times it's roofers coming out there or, drive-by roofers who aren't local, knocking on doors trying to get people estimates for the roof. And that's definitely a concern for us. We normally in the insurance industry like for you to spot the repairs or you to notice the damages because when you have roofers come by, they're not looking necessarily for damages per se. They're looking for wear and tear that can be easily shown to the clients to say, hey, you need a new roof. And if you know anything about insurance, it doesn't cover wear and tear. It covers for incidental damages. So when a sudden occurrence occurs. So the hailstorm was a great obvious one, though. It really pointed out how much roofers had to come out there and show how much damages were done. So that was a really good prospect for us. But a lot of times, the insurer themselves doesn't know their policy. You could probably ask the majority of people, and they don't know their deductible on their house or whether or not they have full replacement costs on their house. And the roof itself has its own set of those coverages. You can have separate deductible for your roof that you could your own dwelling. And that's very common. You're starting to see in the insurance world your deductibles go up and up and up for the wind and hail damages. And that's going to affect majority of claims because most of our claims are on roofs. So when you see that deductible go up, you're really starting to spot some difficulty making sure that that claim's going to be able to cover it if you don't have the full roof need to be repaired or replaced. So with that being said, when we ask them to come out there, they got to show that they have physical damages to the roof in order to get it fully replaced. And normally you have to spot around 30 to 40 shingles on a roof, depending on the size, have to be damaged in order for it to be replaced. Some obvious things with the roof, if you've already had the roof repaired, that's a huge red flag for most insurance carriers. It tells you that the roof is already obviously aged out and they're just already replacing that. So it does tell you if you have different shingle roof, it's really, really difficult to get full replacement cost on any roof to get that fully replaced when you've already replaced part of the shingles. So you're not going to get that full value if you're just doing patches. And that's a huge red flag for us. We always want people to know that, hey, if you have patches on a roof, you're never going to get full replacement value on that because you've already done some repairs to it in the past. So that's a huge red flag for us. And knowing the age of your roof is huge. A lot of people buy houses and they don't know the age of their roof. Most home inspections that they do get back give you kind of like a range of what that roof age may be, but they can never tell the exact date unless they have paperwork to prove it.
So
Tony
Trey,
Gusto has
go
a
ahead.
question that
Tony has
he's
a question.
raising.
Go ahead, Tony.
Can you, Julie, can you make sure he's co-host to be able to
Oh.
speak?
Yeah.
We'll
There you go.
unmute you, Tony. Hang on one second.
There you go.
There
Go
I
ahead.
am. So I've got two questions. One, what are some questions or things we should look for when talking to insurance brokers to spot someone that is actually good and knowledgeable and worthwhile to work with? Because like in any industry, there's good, bad, and everything in between, is my first question. And then I just had a hailstorm rip through Illinois last week and did a bunch of damage to my house. I called my insurance company up, but I also had a roofer that I've used in the past come out and take a look and said there's a lot of damage there. Is it good to have that roofer there when the insurance agent or the insurance adjuster comes out to look at the damage?
Yeah, you mean when you have an adjuster come out, that means a claim has already been filed. And in any case, we always want the roofer to come up there to have a reason to file a claim first. So if you do have a roofing company that you prefer, or if they do stop by, it's always best for them to come look at the roof first so they can compare the same notes with an adjuster. It's not a bad idea to have the adjuster and the roofing company show at the same time. It's better to not have the adjuster come out without you being present as well. So whether or not it's you present or you and them present, we always recommend that they're with the adjuster. Somebody's with the adjuster when they come out to have context of what they see and the damages that they perceive. So what the adjuster will do is they will evaluate on their own. But the roofing company, when they come out there, they're going to definitely show them areas of concern, why they need that, the percentage, and why they came up with the numbers they did to whether or not the roof needs to be fully replaced or can just be repaired. If you have an adjuster come out there, they also they do have their own numbers and guidelines, just so you know, to kind of go off of for whether or not a roof needs to be replaced. And ultimately, if those numbers don't line up with the roofing company, the roofing company can persuade them to give them more information that can go against what the claimant with the adjuster said. So it's always best to have a second opinion thrown in there while he's there or immediately after the adjuster provides their documents.
Gotcha. Yeah, because I know my roof is only like about 4 maybe 5 years old. So uh but my whole siding is like trashed on the backside of my house.
Yes. Yeah, I mean, when you see that physical damage, you obviously there's a storm related. You have storms that can cause damage to your home that are considered catastrophe claims. But when you do have storms come through that affect a certain percentage of people within a community, it can even be just the county itself or the town itself. Those are called CAT claims, catastrophe claims. And just so you know, a catastrophe claim does not count against you as far as adjusting your rates, but it does count against your claim history. So whenever you have a catastrophe claim filed in that area, I would definitely ask them whether or not there is one filed. But most carriers or even websites you can go to can tell you whether or not there's a catastrophe in that area.
Wow.
I didn't know that, and I've actually heard them talking about that this was a catastrophe claim. So that just helps me because I'm not as knowledgeable on this. Which thank you for that.
Great, great.
And
Tony, let's keep it for realtors instead of
right,
personal each
no,
ones.
no,
Let's
and I totally understand, and that's where I was going to go back to. How do we get into interviewing different insurance brokers that can questions we should ask, things that we should see to know if we're talking to a good one or if we need to keep looking.
Yeah, I mean, great question. You know, for one, they need to ask questions. A lot of times you can understand that uh looking at a home is looking at a home, but I mean, we had an example here the other day where a home was completely inspected. The client cannot live in that house the day that they closed is because the power never came on whenever they swapped over at the closing. Why? Well, they had the home inspected. Everything came back fine. They were actually still using aluminum wiring on that house. So that was not part of the inspection. That did not come back bad. But the questions that have to be asked is how old is the wiring on that house? How old is the roof of that house? Like what are some characteristics of that home that are unusual? Does it have a basement? Are the coverages correct? These kind of things you can do on your own. You can look this up. You know, a lot of companies tell you when that electrical was updated. Not having these questions answered can really ruin a deal, or knowing whether or not it's in a flood zone. So a lot of these things you just have to look up on your own. But you know, can you ask them, hey, look, what's an example of a time that you've helped a client that they didn't know what to expect when they closed on their home? It's a great question that, you know, from their experience would easily tell you that there's a lot of things that they need to look at and whether or not they have those coverages. Because I insure homes differently if they have a basement. I have too many stories of clients that, you know, don't have their basement insured properly. You know, they have to have backup of sewer and drains back built into there. And with the basement, you don't count that as part of your square footage when you do the replacement value either. So are they insuring the home correctly when we're trying to do our home insurance valuations. So some questions on there is just, can you tell me some experience where you've insured a home and this has been covered or not been covered? And what were the results of that as well?
David, did you have a question for him? Julie, let's unmute David and give him a chance. He turned his camera on here. Hang on one second, David.
There we
Go
go.
ahead.
Hey,
There you
hey,
go.
hey, yeah. Just want to say hello, and one thing is, Trey, are you doing in Tennessee?
Yes, I'm located here in Tennessee as well. We have a couple offices in Kentucky, but I'm located here in Tennessee.
Yeah, yeah. I have my friend Pedro here, like to introduce to Kim here too. So we at UWM, and they say about same thing with the mortgage broker and insurance. Like you went to one place, that's all they got. If you can't get it, and that's the price they got. But with the broker, like insurance, you get option to do deal that they cannot do. And when we just bought the commercial, I was surprised that some of them like 200,000 a year, and we got one like 40,000 a year. So it's a huge difference. Well, on the residential side, I want to say that one of the time that my client said, my loan officer, they say we cannot do the deal because of the death ratio, but because we went to the mortgage broker, we can get a low rate on the insurance. Now we can buy that house instead of the deal debt. So thank you all of y'all for that. Thank you, Trey.
That is correct. I
Love
mean,
it.
one thing I've learned, and I'll tell you this, most clients are paycheck to paycheck. So when you look at regular everyday deals, that debt to income ratio is the number one concern for most mortgage lenders and realtors, whether or not they can or cannot afford that house. So most realtors will ask us, hey, what is the home insurance before they even buy that house, what that looks like. For one, to see if that even fits their debt to income ratio. And that's a huge factor in what we do on a daily basis. So we'll get some of the last minute deals come through that, hey, look, USA quoted this $3,600 a year, and we're quoting this at $1,800 a year. That's half the price. That's a make or break for their debt to income. And a lot of times that loyalty with that carrier goes out the door once they find out that, hey, look, we're quoting this with more coverages and half the price. What's going on with that deal? And that's just because they didn't look around. That's all it is. They just didn't look around and tell them there's other options.
So, Trey, are you saying that if you know your client is tight on their financing and on their payment and their comfort zone and what they're going to qualify for, that you're willing, if we send the house over that's going to make them tight, you can give an idea of what it would insure for by sending you over the house? Is that correct?
Yeah, I mean, absolutely. I mean, if you even have a budget, we can tell you what that budget looks like. So if you have to get it below $150 a month, whatever that number may be, we can show you what that number looks like. Now, from our perspective, we have to insure a home at replacement value, no matter what it is. That's the aspects of the home. Every home insurance policy, we have to insure for 100% replacement value. And that normally coincides with what the loan requires as well. Some don't, some do, but majority do. Have to insure it for 100% value. And that's basically the logistics of that. But outside of that, everything else is based on the performance of what we can put in there, what coverages are allowed, and going over those in detail with the client as well.
Rob Campbell had a great question on that. Does the claim follow the client or does it stick to the home? So, in other words, how do previous claims affect rates for the client or the home going forward?
It's always follows the client. So if I'm the only one on the loan and I'm the only one on the insurance, the next house I buy, if I put that in my wife's name, would not follow us. So it follows the individual, not the spouse or anything like that. If the spouse is on the loan or on the insurance, then she's normally listed on the policy, that will follow her as well. So that person and anybody else that's related to that person, it could follow them as well.
How does that affect rates?
Um, you know, you don't want little claim. A claim is a claim. That is rule number one when I say it. Whether it be $100 claim or $100,000 claim, a claim is a claim. So
Oh,
we'll
wow.
oftentimes get these insurers call us and say, hey, look, I'm being canceled by my insurance. We look at their claim history and they have maybe one or two extra claims within the last 3 years. And those are like food spoilage claims for like $300. Now, a food spoilage claim may not have a deductible, so they're getting paid the $300 outright. But anytime you have a claim, it's going to be a surcharge on your rates. And those surcharges last for 3 years and 5 years for eligibility. So when you have a claim, you're going to get a surcharge on your account for a minimum of 3 years, but it stays on your record for 5 years. So when we
Wow.
reports, if it shows you have a claim within the 5 years, maybe two within 5 years, you go into a high risk category. If you go into the high risk, you're rolling yourself out of normally 70 to 80% of standard carriers, and you're putting yourself in a much higher risk.
I love it.
And
So
those
Trey,
risks, they're going to make you pay for it.
I love it. Trey,
So,
so
so if you're going to make a
you
claim,
could,
make it count, right? Is that what you're saying?
Yeah, well, that's
right,
100%
yeah,
right.
better
We
count.
definitely don't want an adjuster come out there and you not 100% positive you want to file a claim. So as an agent, that is our number one category. We don't want you to call the carrier. If you call the carrier directly, you're going to file a claim whether or not you want to or not. You call your agent, they can advise you and even have somebody come out there and look at the roof before the adjuster comes out there. Because if you are calling a 1-800 number, you're calling any number or maybe going on the mobile app to do it, you have filed a claim. And a claim is a claim, whether it be zero paid out or 100,000 paid out, a claim is a claim. And those claims
Wow.
do not go off your record for 5 years. So a lot of the times people will call in, to a 1-800 line, and they are called inquiries. If you inquire about a claim, you started a claim. So you need to get those off your record. And you can do that by calling a number and disputing those, but it's rare that those are taken off because you did call them and ask them about it. Unless they filed it themselves, it's going to probably stay on your record.
Wow. So Trey, in your experience, what catches realtors off guard the most? Like, so if you could wave a magic wand and you could make every realtor understand just one thing about homeowners insurance that screws up deals, what is it that they could do better?
Well, guys, this is something I don't expect any of you guys to know, but it's called protection class zones. Protection class zones. And every house is rated on a protection class zone of 1 to 10. Okay. And those protection class zones can make your home completely ineligible if it's a 10, or it can make it really low rate if it's a 1. So that's basically your distance from a fire department. It is amazing how many carriers will judge your entire rates based off your protection class zones. So if you got this new development coming out outside of town that, hey, it's beautiful homes, but hey, look, this is a protection class 10. Most carriers will say no to it, but if those that do say yes, they're going to charge them quite a bit for protection class zones. And that is, again, that's your distance from mileage from you to the closest fire department to come out there in case a fire was to occur. And, you got these new developments coming up and they're like, oh yeah, these are great. But, they didn't build those fire departments around those houses. Those houses built themselves before the fire departments. So, you really got to know what zone you're going to be in before you kind of do that. Now, if I'm everybody in my neighborhood is probably gonna be the same zone, right? We're all gonna be in the same zone, same class. Each carrier is gonna say we're all the same thing. But you go further away from that fire department, you're putting yourself in a different zone. Those rates can be highly affected on that just based on that information.
Now,
Wow.
will
I
they
bet not too
recast
many
your?
people on here knew that.
Yeah, I didn't know that. Will
Nope,
will
I
they
didn't know it either.
recast your rate when a fire department is built nearby?
They do. Everybody kind of measures off of their own information from what they have. So once a year, they will check those zoning and see if it changes. But a lot of the times, they don't update those for years, right? Like nobody's going to want to update this daily. And does it affect you? Probably. I mean, just because the zone happened doesn't mean your rates get changed during midterm. You have to wait to renewal to see if that even affects your rate. Um, you know, Heck, maybe a fire department went out of business, and that can make you ineligible. That happens as well. So let's say a fire department went out and they update their system, and then hey, previously I was a sub zone 4, and now I'm a sub zone 8. Well, why my insurance go up $400? Well, hey, where'd that fire department go? So those things can affect it both ways too.
So Trey,
Man,
you're saying that everybody needs to vote for the bonds when they come out on the taxes, right? Vote yes on the
Yeah.
bonds if they're building a new fire department nearby. Is that what you're saying?
The better, man. They like those fire departments to be close. And that is something, from I've been in insurance for 15 years, and you learn that the protection class zones very, very crucial on getting the best rates. I mean, every insurance company keeps an insurance score. Everybody has an insurance score. I have an insurance score. You have an insurance score. We all have an insurance score, and that's based off of your history of owning a home, paying your bills on time. Even your credit score kind of plays a factor into that as well. So when we get all that together and then you put the protection class together, those are some of the biggest factors of what coming into your annual rates for your insurance.
Great. We got a couple questions in the chat. One of them is, how often should we check rates for our homeowners insurance?
That's a great question. A lot of times when a policy does renew, you have to ask yourself what changed on that policy. A lot of home insurance companies will do evaluations at your renewals, and those evaluations meaning, hey, look, inflation, how bad was it? So if you previously had $300,000 in coverage and it goes up to $350,000 of coverages, the extra $200 a year on your home insurance play a factor into that. So, I say, if you're starting to see an increase in that, it's not necessarily because of, the coverages just went up or price went up. They're trying to keep up with inflation. But I would check your coverages about every other year just to make sure that they're all lining up. Unfortunately, a lot of times, a lot of these are escrowed through their mortgage. They don't check it. They don't check it. But when they find out they're behind on their escrow because their home insurance went up and they're not paying enough, that's normally when we get the phone call of, hey, look, I need you to shop my insurance and we need to do something like that. As an insurance brokerage, we can always shop your insurance. There's nothing that can stop us from swapping you over midterm or before renewal and showing you how that escrow analysis works. But, we expect you to look at your escrow analysis to make sure it's in balance every year.
Kim Campbell wants to know, how do we know our protection class zone? Is that right, Kim? You want to know protection class zone, or you said, how do we know our score? You're talking about the protection
our
class zone, right?
score, our score,
Sure. Yeah. So everybody has an insurance score, whether it be personal or home. Some carriers will be open and blunt with it. They'll tell you, hey, we're not taking this household because of their insurance score. And then they'll tell you exactly what your insurance score is. But every score, some carriers will disclose it, some will not. So it's
Okay, since you just did my house, I do want to, because I want to know my score. You can publicly say that.
It was
yeah.
terrible. Just say it,
What's
Trey. It
my
was
score?
terrible.
Yeah.
With Kim's
No.
driving, it was
Hey,
terrible.
But by the way, I want to let you know that our insurance rates kept going up and kept going up, and we added our 16-year-old to our policy, and it went through the roof. So we had Trey, he was introduced to us by John Herhold, redo it, and Trey saved us $2,600 a year on our combined auto and home. It was crazy.
Right.
So do
Right.
get them checked. Get your interest rates checked. Don't just go by their normal annual renewals and stuff.
Tony Giusto has, that's a great idea, Rob, and I think everybody should do that. And annual comes around every year. It actually, for everybody on here is a real estate agent, because everybody's here is a realtor. Probably a good touch to your clients after the sale would be annually on their home anniversary, reaching out to them, of course, saying, happy house anniversary or whatever it is that you say to them, and say, by the way, now might be a good time to to do an audit. What do you call it, Trey? What's it called? Is it an audit? What do you guys call it? A review.
Yeah, we want to do an annual review.
Right now might be a great time to do an annual review. Do you want me to connect you with XYZ, like Trey, that you're using? And it's a great touch, and it's a high value touch you're bringing to people, not just an email newsletter you're putting out. And it gives you a chance to see what's going on in their life, where they're at. And, high value touches are what's important, because we know we have to stay in touch with our previous clients, because what's the saying? Every person knows 5 people that will buy a house in the next 12 months. And so your clients, you're helping them, you're bringing them something value. Maybe we save them some money on their insurance. They're going to remember when their neighbor's looking to sell to give you a buzz and hook them up. So that's what we're looking to do with that. I saw Tony's hand up. Tony had a question. Does having a police station closer affect your score? Tony, are you talking the protection class zone with the fire department, or are you talking about your personal score?
The Well, both.
Okay.
because I
Trey,
wasn't
does
certain if that did
police
any effect.
station, yeah, does police station proximity have anything to do with it, Trey?
It has nothing to do with it. You
No
do have
police.
your own security that you can install a security system on your house that is monitored through a company, and that's typically a 3 to 5% discount. And if you self-monitor it, it's normally like a 1 to 2% discount on your annual premium. Police station would not play a factor in that. Everybody's worried about the burn down scenario, but that's more the fire department issue.
Okay. Very good. Tony Justo, hands up again. We got a question?
Yeah, for the security system, would like you said self-monitoring, would that be like a Simply Safe system, or would that be considered, you know, a not self-monitored system?
Yeah, so you can self-monitor it yourself, like you have your own cameras, and that is a discount. It's typically 1 to 2%. But if you get one that actually gives you a certificate that's showing that it's monitored, whether it be smoke alarms, fire alarms, burglar alarms, all of those, if you get like a full certificate, then that's typically can go up to a 5% annual discount in your home insurance.
That's like your ADTs, your Vivint, your Brinks, things like that that are actually monitored, and if the smoke alarms go off, the fire department shows up.
Yeah. Self-monitor
Okay.
versus them monitoring it are two separate things. The main thing is you have to have a certificate. There's not pretty much any carrier that'll give you that discount without a certificate.
Awesome. So Trey, everybody on here is a realtor and they want to be proactive with their clients and things like that. Let's say you're walking through the house with us and we're walking through a house. What are like five things that should stick out and ring alarm bells to us, or a handful of things like, hey, this could be a potential problem. I should probably get in touch with Trey ahead of time on this house. Like, what's something that should stick out to us as a realtor? Number one, you said was the roof. We heard that earlier.
Yeah, roof is a big one, but I mean, a lot of times people have pools in their backyard or trampolines.
Pools.
Depending on your distance from other homes, you have to have a fence around a pool. You'll see a lot of suburban homes maybe sometimes have a trampoline or a pool in the backyard that's open. That's a no-go. There's no carrier that will insure an open air pool, meaning anybody can walk right into it without a fence or a gate. That is a huge no-no. They will be denied, 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 denied. There's only one or two carriers that'll do it, and they'll charge you crazy. And all you have to do is just put a lock on the gate. So I would highly, highly, highly encourage you, if you were looking at something with the in-ground or above ground, makes no difference. A pool's a pool. You have to blockade people from getting to your pool. So that's a main thing. Ultimately, this isn't necessarily something that's in the house, but your dog that you bring to that house makes a factor for your insurance as well. So if you tell your insurance carrier, "Hey, look, I'm buying this house. I got this pit bull," most carriers will either say no or, "Hey, look, you have to sign an exclusion for that house." And that exclusion means you're not actually covering that animal in case it bites somebody, and that's the most common liability issue. So knowing what you're bringing to that house makes a factor as well. That's a huge one for us. It's a huge factor of what you are getting insured is whether or not you bring an animal to that house. Now, if it's like a border collie or anything like that, that doesn't play a factor in it. It's normally the aggressive animals, the pit bulls, that typically have the biggest exclusions. But what you're bringing matters. And then the electrical is a big one. As I mentioned earlier, person closed on my house and they couldn't even start the electrical the same day because it was still on aluminum wiring, and even have a circuit breaker. So when you look at a house, make sure it has a circuit breaker and that circuit breaker is up to date. You do hire these people to do inspections on your home, but that doesn't necessarily mean they looked at every little detail. So you need to make sure that home is circuit. I mean, if you need to hire somebody else to come look at that, if it's an older home, then that makes the world of difference, because if it is on knob tube wiring or doesn't have a circuit breaker, you might need to make sure that that's either being part of the upgrades before you close on that home, or that is something that it's up to code. A lot of those are not necessarily even up to code either. One other
Now, Trey,
factor that
is that something as an agent we could bring to you ahead of time? Say, hey, is this going to be a problem? Like a
Oh,
picture of the circuit
absolutely.
breaker box
Yeah,
or
I mean,
something?
the carriers ask for that for sure right away, and that's going to be before we even kind of finalize the deal. I mean, you get to where you're in the 70s or 80s, pretty much all the homes are going to be up to date on their codes, but you get to the homes built in the 60s, in the, anything in the 60s or later, you're starting to have questionable wiring done that may not be up to code, but you start to get the 80s, 90s, you're probably not going to have that issue as much because the codes are up to date at that point. But we come across homes built in the 1940s that still use knob tube wiring, and that's just a matter of time before the house burns down at that point. So it is asking the right questions and see what kind of things are done for the electrical in that home. Especially if it's Lumen, Romanex, if you're using those kind of things, why did they use that? How long has it been done? When was that completed? And ultimately I still would have an electrician come out there and look at it.
So the dreaded 1900s, you're saying, Trey. Homes built so long ago, back in the 1900s. They're ancient homes, right?
Yeah, you're starting to look. I mean, if you notice, I mean, heck, I insure homes built, new construction homes. I'm telling you, those can be the cheapest insurance policies you insure, and the newer the better. That means everything's up to date. You're less likely to file a claim. But I kind of that's their insurance company's way of thinking of it. They're cheaper rates the newer the home is. But I would also say the newer the home, where does the water run off? And that's a huge thing for us. First off, is in a flood zone. But when you get these heavy rains, we oftentimes get these new construction people that bought a home not know where the water flow goes. And if you do have a slab base and you have a pitched backyard, it's going to go inside your house if it's not done correctly. So you can, as much as you say that should be up to code, no, they can't tell you what it is until a heavy rain hits. So we always look for, hey, look, where's the water run off to? If you're on a hill, that's great. But these new construction homes or anything like that, they don't take that into consideration. So when you do see hills in the backyard, you see a flat concrete slab as the foundation of the home, you're going to hopefully have some heavy rains happen before you buy that home to get the consistency that water is not going to flow right into my house or backyard, causing damages to the stuff that I've just put in. So huge factors that go into those kinds of things. Experienced homes, I feel like, don't have that issue, right? Because they've already adjusted it or flexed on that. But it is nice to know where the water runs.
Trey, what have you seen like from years ago that was like super easy to insure, and now that it's getting harder and harder as we go? And where do you see the insurance going, where it's going to get more difficult as we go, the industry?
So I think the market's opening up. A lot more people want to take on risk. From where our perspective, Tornado Alley's shifting. So you're starting to see higher risk zones come a little bit more our way in all of the Southeast. So the tornado disasters, if you see catastrophes happen, that's going to be a big thing. Just in East Tennessee alone, there was the wildfires that happened years ago, and that got everybody either out of that market in that area or they shut down insuring those homes altogether. And a lot of those became class codes 10, which made them ineligible. So you're going to see the shift of that based on the weather patterns rather than the carriers are making up their own things. An example of California, the wildfires that happened there, where the insurance carriers are being sued by the government or the state themselves. Basically, if you don't want to do business there, why we get to charge them what the state allows? So anytime you come up with a rate, these carriers come up with a rate, or they want to increase their rate, they have to get approved by the state's guidelines. And those can take sometimes years to get approved to increase their rates. So you're seeing a big fluctuation based on the weather patterns of certain states. That is a huge factor that whether we know now or not going forward, we can't determine. If they could determine it now, then they probably would. They'd be making adjustments, pulling out of states. But when the profit's there, the years that there's not bad weather, they're going to really say, hey, look, we're going to try to grow this state. But when the bad weather hits, catastrophes hit in that state, you'll see a lot of times they pull out, insurance rates go up, and that affects everybody. That doesn't affect one person, that doesn't affect one household, that affects the whole insurance industry, because when one carrier, who's the dominant carrier in that state, goes up, all the other carriers follow suit.
I remember those fires in Gatlinburg, Tennessee, and stuff like that that went through there. That was brutal when all that happened. So,
Mhm.
with everybody being a realtor on here, Trey, what's the biggest mistake or mistakes that realtors unintentionally make that cause you a headache that we can try to do to avoid giving you headaches?
Yeah, I mean, they definitely need to partner with an agent that also works with a good mortgage lender. So if you guys have that three-way combo of the realtor, mortgage lender, and insurance agent, I know insurance agents get left out of that conversation a lot. Uh, it is really important that they work as a three-way group and make sure that the home's insured properly. And for two, that the consistency of no matter what, that home will be insured at the deadline with under the debt to income ratio. So if you are partnering with mortgage lenders, make sure that mortgage lender is also partnering with the insurance agent. And then there's a three-way conversation there because if you have somebody you're working with and you send them to me directly, I would be more inclined to reach out to that mortgage lender myself to make sure I got everything that they need for closing, to make sure we're insured for 100% replacement value, at least the consensus of what they're purchasing it for is covered. And that typically is not an issue, but it's normally just talking to the mortgage lender themselves to get the insured the right debt to income ratio. But the consensus of you don't make up numbers. I don't want anybody to tell an insured, hey, look, this is what it should be, because I can look at a home and pretty much tell you what the things would be, but I'll never give a number without actually running it through my system. So it's like assuming makes an ass out of you and me, and we definitely don't want that to be the case just because we don't run the information.
When do you recommend that buyers actually start shopping for their insurance? Like, how early is too early?
Well, this is another thing you may not know, but in the insurance industry world, the longer you quote out, the bigger the discount. So if you try to close on a house the same day that we're doing the insurance, we could do it, but they're going to charge you more for it, and that normally consists for the next 3 years. So until that discount falls off. So, but if you are quoting a house out, we like to ask for at least 14 days. 7 days is pretty standard in our insurance industry, 7 days before closing, which that's perfectly fine. But if you quote out 14 or more days, you normally get a discount.
So you're
I
saying
didn't
at
know that.
maybe a contract, once you're in contract, it's worth starting insurance quoting right then.
Oh, absolutely. Even if you have a closing date out a month, 40 days from now, whatever it may be, we can issue a policy and go ahead and give you that discount and lock it in way before then. So now consistency, as long as the mortgage lender has the loan number and everything they need for closing, we can go ahead and lock that in. But if the closing date changes, that's no problem. The insurance companies can just adjust the closing date, but you still get to keep that discount for quoting it in advance already.
So for everybody on here, put that in your pocket. That's a little, when you're justifying your real estate commission like that you're getting, right? Look, I'm going to work on saving you some money on your homeowner insurance. Let's get started on this right away because there's a discount the longer out we quote it. Did I say that right, Trey? The longer out we
Yep.
quote it?
Yeah, absolutely. You typically the discount will start at a minimum of 7 days. But if you go up to 14 days, most carriers will give you that biggest discount eligible.
So there's a value add for everybody on here for your clients is to get started earlier. I did not know that, and I was probably one of those day or two before guys, Trey. So don't kick me off the Zoom here.
We
It's
like
like
it when
that
you guys
guy's
give
out
a
of here.
to-do list. I like the to-do list. When you give them a to-do list, tell them, hey, look, this is what you need to get done your first week, this is what you need to get done your second week. If you give that to your clients of what they need to get done, that's a huge thing. And you can put, hey, reach out to this company, make sure you get quotes from them or them, just kind of give them that evaluation. But you also have to rely on the client to relay information to us as well, whether it be of who to contact, who's my representative, who to reach out for the mortgage information. Those kinds of things are really great for you guys to communicate with the client. So it can all be done really quick conversation.
Awesome. Here's something that's on everybody's mind right now is how is AI changing underwriting and risk assessment and things like that? What do you see happening with that in the future?
A lot of time roofers aren't actual people nowadays when it comes to inspecting roofs. It's a lot of time drones. You see the drones inspect homes, and whether or not they'll form evaluations, whether or not they're eligible. So you're starting to see that technology form its own answers. It's not perfect in any way, shape, or form. I've seen a roof get climbed because of a shadow casted from a tree 30 yards out away. So it just made that roof look like it was older, but the AI didn't determine whether or not it was actually a shadow. So you're seeing these kinds of things happen, and you're seeing evaluations of homes themselves go by off Google Home. I'll be honest with you, a lot of these insurance companies use Google, Zillow, all these sites to determine a lot of information based on their underwriting reviews. And so they're relying on information that may be outdated. But you're seeing these things happen, and you're saying, hey, look, why is this occurring? Well, a lot of times they're getting more accurate information than the client themselves would give. So they're finding the most accurate way to get this information, and they're finding easier ways to do it. And a lot of times AI is driving that gathering of information to determine what the best evaluation is. So when we actually put information on a house, some of the information pre-populates. It tells you, hey, look, we think it was done this year, because they went through photos of the roof of that home or outside of the view of that home and say, hey, look, this was changed on this day because on this day we have photos here and on this day we have photos here. So between these dates, they had to be done. And they'll do those photos from month to month to month as often as possible to get that information. So all that's driven by AI technology.
So Trey, is there a way if you see something that looks weird, you and your clients are looking at some insurance quote that comes back, is there a way to request like a manual review or for, somebody to look at it again? Is that possible?
Absolutely. Those are called either my best friends or my worst nightmares. So I'll call them. I know them by name. I'll talk to my underwriter, say, hey, look, this is a wrong evaluation. And it's click of a button for them. So you have underwriters that do get to look at things, and that's a huge factor. For quoting online, you're your own underwriter. You have to call them to convince them. But as an agent, having an agent who knows the underwriters or knows what to look for is always important. So if you're trying to do it on your own, you're not going to win that battle. But if you have an agent that can call the underwriters directly, you're going to have a fair chance of getting that fixed pretty easily.
So it's better, Trey, you're saying to have somebody local that you can contact, or so not local is not the keyword, but an individual you can contact versus a call center. It's way better to have an individual so they can go to bat for you.
Oh, absolutely. I mean, they'll know the area more than anybody else too. So whether it be local or state, I mean, I know everything about the state of Tennessee or Kentucky for what they require on their insurance, but just to know these extra factors built into that is really, really smart to know.
Beautiful. I love it. Kim had a question in the chat. She said, do you closing for small home care like 6 beds?
Oh, yes. Yeah, absolutely.
Okay, great. And what's something, Trey, that you don't do? Is there anything you don't do? You don't do commercial, you don't do things like that. What is it that you don't cover for people that wanted to hit you up and connect with you on deals?
Um, we do everything. I'm just not going to be the person myself that's going to talk to you about health insurance. So I have somebody else in the office talk to you about that. That's not going to be my evaluation. We can do life insurance, we can do everything, but I do a third party company for our health insurance conversation. So a lot of times that may come up for Medicare, major medical, and those people live in a different world than me, guys. I'm not going to be that person. I can study that, but it'll change tomorrow. So that's not going to be something you need to talk to me about.
So you're property and casualty, and then you have referrals out if people need health care, life insurance, things like that.
Yeah, you can call us directly. We're going to write it directly for life. But I have specialists here in our office. I mean, some things you just need specialists to have that deeper conversation with you in. But we're going to do commercial as well. That's a very, very big focus for us. We want a lot of awards off commercial business as well. But we have certain team members that are dedicated to doing that commercial business more than just one individual that can do it all.
Got it. And so Rob Campbell has a new 16-year-old driver and Kim Campbell on his policy. So he has a question that says, do auto claims cross over and affect homeowners' policies and vice versa?
It's very rare. If you have like a DUI, maybe a couple carriers will say no to it, but most of the time, home insurance carriers do not run auto reports. There's only like maybe 5-10% that run auto reports where you actually have to have their driver's license number to run a home quote. And that's very rare, but it does happen. And most of the time, they're just checking to see if you do have a valid license because they do consider that a factor in your home insurance rates.
Love it. And so we're speaking with Trey Bowen, and so if anybody has questions as we're getting close to wrapping up, I'm going to do a little lightning round with him. But if you have a question, you can either raise your hand and unmute, or you can put it in the chat. But we'll do a little lightning round with you, Trey. Are you up for it? A little rapid fire coming at you. Kim Campbell, you got your hand up? Question?
So you just cover like the East Coast, only not the West Coast, because a lot of our agents who are listening to the video will want to know, how do you cover the West Coast, like Washington, Oregon, California, all the people on the West Coast? That's a no.
That right now is a no. We're not going to be able to serve that West Coast. Those West Coast people probably need a West Coast agent because a lot of time a West Coast agent, maybe just along that area, are only going to insure that state directly. So a lot of times they have different stricter guidelines, especially the state of California or something like that. That would be more inclined for their agents that are local.
Got it.
Got
And
it.
we've got, if we can post Trey's website again in the chat, and then also we'll make sure it goes in the description for those of you watching this on YouTube so that you can hit him up. You can find out what states 17 that he's covering, make sure your state's in there, and then also his contact information, how you can get a hold of him and how you submit a deal and things like that. So that we'll have all that stuff in there for you, Trey, to go with that. But you want to do some lightning round and then we'll jump off here? You ready?
Of course, yeah, guys.
All right, so here we go. So this is kind of fun. So here's what I'm going to do. I'm going to throw out a property, like a property type, and you're just going to say the first thing that pops into your head. It can be funny, it can be crazy, it can be a story, whatever that pops in your head. So you ready to go?
Shoot away.
All right, so here we go. So how about a 1920s farmhouse? So a 100-year-old farmhouse.
Oh, well, better not be built with logs. Those are the worst ones. So if you build that home out of logs, you might as well know that you're going to pay an arm and a leg for your insurance.
Logs. Okay, so good to know. So Amish log building, we're going to pay a lot for that. A flip home.
Flip homes, typically you're not going to be the one living there. If you're looking to flip it to then resell it, you can do a risk advisor one, which is going to charge you a little bit more, but it's going to cover your stuff if it gets stolen. So pretty easy.
Cool. So they buy it to flip. They're going to be holding it for 6 months. There's a special policy for that, you're saying.
Yes, absolutely. And you're,
Beautiful.
I'll be honest with you, Liberty Mutual kicks butt with those.
Very cool. Vacant house.
We even have an insurance carrier called Vacant Express. They love vacant properties. That's typically not a standard thing that you have if it's over 90 days.
See, this is why you use a broker versus just one where they're only selling their products, right? Of some specific brand name thing. He covers all 100 of them. Okay, so log cabin. We already said this thing about logs. Going to pay a fortune. All right, got it. Lake house, vacation lake house.
Those are pretty standard. You're not going to see any upcharges on those. You just got to make sure you're not in the flood zone. So if you're in a flood zone, you just got to make sure you have flood insurance.
Tony Justo says, how about estate homes?
Oh, those are easy as well. So whether or not you're forming the estate or you're buying the estate, that has no factor in consideration on whether or not we even ask that question or affects your rates.
Okay. Condo.
Condo, super cheap. You better make sure you have a master condo policy before you insure it to read the guidelines because every master condo policy is different. But those typically run, super inexpensive for any client just to insure their stuff.
Beautiful.
Read the
Duplex, where
master
you're
condo
living in.
policy though. That's your number one rule. Read the master condo policy.
Read the master condo policy in the condo
Yes.
docs. It should be posted on the MLS with the listing. So should be.
Yeah, absolutely.
Trey, a duplex where you're living in one side, renting the other.
That's becoming more common. You're starting to see a lot of people take advantage of that opportunity with the mortgage lenders. So that is very easy standard policy to insure. You normally can just do an endorsement on that policy to have that extra coverages.
You're the investor, right? So you own it. What do you need to make sure the other people carry if they're your tenants? What should they be carrying?
You have to have liability insurance on your renter's policy to cover for any issues that they may occur. You can require them to have it, and then you can require yourself to be listed on there to make sure that you're getting notifications whether or not that policy is canceled or continued.
Very good. Woo, I don't know if anybody caught that. You want to say that again one more time, Trey? That's a big one. We got a lot of investors on here.
So if you have a place that you're renting out, you need to make sure they have liability, and you can determine the factors. So the liability numbers go normally 100,000, 300,000, 500,000. The standard liability policy should cover 300,000 liability in case they cause damage to the premises and they need to be protected to pay for your damages. So if they go upstairs and they flood their bathroom sink or their toilet starts to overflow because of damages they did, their liability would then pay for damages to the building, which they typically wouldn't have under a renter's policy that covers just their personal property. So that's pretty standard to have in there, but you can determine the amount of liability they have to have as part of the renter's policy.
That is huge. I know a lot of people buy single family homes and rent them out. I guarantee they're underinsured on that kind of stuff. Great. How about this one? Manufactured home. Welcome to Ohio. Go ahead.
Yeah, the newer mobile homes, you're going to find them pretty easy to insure. But when you start to get these older manufactured homes, it's definitely a little bit more difficult to insure. And that's one of the few properties that you may not get the full replacement value that you're expecting. Because a lot of times you're paying for the land. So if you do get a house that you're paying $150,000 for, but you're sitting on a 1980s manufactured home that's worth maybe $20,000, $30,000, you're not going to get that full evaluation that you're expecting. So just know that the evaluation for that is going to be basically a lot of that's the land, not the property itself.
All right, four more. Historic home.
Those are very easy to insure as well, just as long as the updated electrical, heating, and plumbing are done.
Big one here. Airbnb.
They typically insure those nowadays with a rental property as if it was a short term, so it's not an issue. A lot of carriers that do rental properties directly will not charge you more than a regular one. So rental property is a rental property with them.
Okay, and then the last three are a home with a wood burning stove. Does that make any difference?
Don't do it.
Don't do it.
Don't do it. Don't make that your primary heat source. If it's your primary heat source, you got a problem. Because if that's your primary heat source, they're going to say no to it, or you're going to have to update it. So we don't recommend that be your primary heat source. And if you do wood burning stove, it can be just a factor of what your air conditioning is doing as well.
A home with solar panels.
They're not going to charge you more for it, but you're going to want to make sure those are covered. So your dwelling extension coverages need to be increased to ensure those. It's not going to be a factor of just because you have those, you're going to get discounted rates either. So you just need to make sure you have the right coverages to protect those rather than whether or not it affects your rates.
And the last one, your favorite, you talked about it earlier, home with a pool.
Home with a pool. Just got to have protection on that pool. Nobody can just walk into your property and get into it. Some companies, regardless whether or not you have a fence or don't, will charge you for a pool. Some don't charge you for a pool at all. If you do get charged for a pool, it's typically around $80 to $100 a year. So it's not that expensive. Just any pool owner knows having a pool is expensive itself. So just know that it's going to affect your insurance just a little bit in some ways.
Beautiful. Round of applause, everybody, for Trey sticking around here past the 1 o'clock. Thank you, Trey. A wealth of information. Here's the thing. If you're watching this on recording or if you're here today, go to Trey's website. Trey, is your contact information on the website the best way to get hold of you, or is there something different you'd like people to use?
Nope,
Great.
That's the best way to get a hold of me, we promise you.
Great. And so we'll put again in the chat. Want to say it again, Trey, in case people are listening on audio on the podcast, your website again?
Insure@legacy.com. Insure@legacy.com.
The word insure at, not the at sign, at, legacy.com. Insure@legacy.com. We'll have it in the chat here. We'll put it again in the description. You go there. What is it, Trey? The contact us button. Is that what's on the website to click?
Yep, you can get started with a quote today. You can compare your insurance currently that you have, and you can even check out the states that we do have currently insured. So we expect that you call us first if you need anything, or you can correspond to us via email and get right back with you. Oh, there's my kids.
There's your kids. Oh, they're cute, man. Good job.
I'm a family man, so I'll take them everywhere.
Very good, very good. No, that's good.
Very
Kids
cool.
and animals, man. That's what gets people. So up here, you can see if you're watching this screen, they have a call or text us phone number that you can do. And then over here on the left, they have some buttons where you can get quotes started and things like that. And Trey's awesome family. So Trey, thank you so much for being on here with us today. I'm going to stop our recording and I'll say goodbye to everybody.